In the wild, wild west of cryptocurrency, you've got your big guns. You know them. Bitcoin, the original gangster. Ethereum, the smart one. They're loud, they make headlines, billionaires tweet about them. The news either screams to the moon, or it's all over. But while everyone watched the main stage, a quiet revolution brewed in the background. It wasn't on the flashy exchanges, it didn't cost thousands to get in. It was happening on millions of smartphones, in pockets and purses around the world. Johannesburg, Jakarta, Sao Paulo, Seoul. This is the story of Pi Network, the project that decided the party shouldn't just be for rich tech guys. Alright, so what exactly is this Pi Network? Let's break it down. Imagine if Facebook, back in its early days, decided to give all its users a little piece of the company, just for showing up and being part of the community. That's kind of the vibe with Pi. It's a cryptocurrency, yes, but it's designed to be the people's crypto. Its main goal is to be the most widely distributed digital currency in the world. Unlike Bitcoin, where a few early miners and big corporations hold a massive chunk of the coins, Pi wants to spread the wealth. The whole system is built around getting Pi into the hands of as many everyday people as possible, all over the globe before it even hits the open market. The big difference here is the starting point. Most cryptocurrencies open the mall and try to get people to move there. Pi does the opposite. It's building the city first, gathering millions of users they call pioneers. They're building a community, an economy, and a network before the currency has a public price tag. When Pi finally goes public, it won't be an empty mall. It will be a bustling metropolis ready to trade and build. Every big idea starts somewhere, and Pi's story begins on a university campus, Stanford. This isn't a project cooked up by anonymous developers in a dark basement. The founders are real people with serious academic credentials. Dr. Nicholas Kokalis and Dr. Chengdiao Fan, Stanford PhDs. They're experts in computer science, social computing, and human-computer interaction. Their background means they obsess over how real people actually use tech. They want to build something that feels intuitive and human. Their mission was born from frustration with crypto circa 2018. They saw the first wave failed on accessibility. Bitcoin became too expensive and technically exclusive. Kokalis and Fan envisioned access for anyone, regardless of tech knowledge or wealth. Their mission? Build a cryptocurrency for and by everyday people. They rethought how a network is secured, choosing a consensus approach based on stellar consensus ideas. The result? A far more energy-efficient, user-friendly approach than proof of work. Their social computing background helped design a security model based on trusted social circles. They launched on Pi Day, March 14, 2019, quietly, with no big marketing budget. Seriously? Mining cryptocurrency on your phone? That sounds like a recipe for a dead battery and a phone hotter than a pepper sprout. So how can a simple smartphone do the same job? Short answer, it doesn't. The term mining in Pi is a simplification, a user-friendly metaphor. You aren't actually performing heavy calculations on your device, it's a smarter, greener system. Tapping the lightning button once a day proves you're a real, engaged human. You're contributing to the network's trust graph. Think of it as a daily check-in to confirm presence. Security comes from small, trusted circles of 3-5 users you vouch for. The heavy work of validating transactions happens on servers, not on your phone. The daily tap is your ticket to earning Pi, a small reward for vouching. This is a game changer for global accessibility. Barrier to entry for Bitcoin mining is immense. Pi's barrier, a smartphone and connection. A farmer in rural India, a student in Nigeria, a shopkeeper in the Philippines. Same opportunity as a Silicon Valley engineer. It levels the playing field, democratizing currency creation. A currency is only as valuable as what you can do with it. If you can't buy a cup of coffee with it, it's just numbers on a screen. Pi's enclosed mainnet is a phase to build a real-world economy first. The chain is live but protected from external exchanges. The idea? Force the community to build and trade with each other first. Vendors label items in PI, creating real utility before speculation. All over the world, pioneers use Pi to barter for honey, crafts, electronics, and even cars. In Vietnam, Indonesia, and parts of Africa, merchants accept Pi in shops. We accept Pi sign. These aren't hypothetical, this is happening now. Someone might trade 10 Pi for a haircut, or 500 Pi for a used motorcycle. It's grassroots, peer-to-peer, driven by belief. Communities establish their own consensus on Pi's value. Hackathons and devs are building marketplaces, games and social apps that use Pi. These projects will drive long-term demand, turning Pi into an ecosystem, not just a token. Whenever something sounds too good to be true, get free money just for tapping a button? Alarm bells should ring. A big criticism: Pi coins have been untradeable on open markets for years. You can accumulate them, but you can't cash them out for dollars or euros. That's led many to call Pi pointless, or worse, a scam. Critics say coins have no real value until listed on major exchanges. Pi launched in 2019, and by 2025 it's still an enclosed mainnet. Slow progress worries some. Some early believers lost faith and walked away. People worry about data, phone numbers, Facebook sign-ins, eventual KYC. Skeptics ask, is this a crypto project or a data harvesting operation? The team says they're committed to privacy and don't sell user data, but collecting millions of identities is both a responsibility and a vulnerability. There's also the MLM accusation. Growth via referral codes raises red flags. You can earn higher rates based on invites. Critics say that favors early adopters. But the team points out joining is free, no money required. Referral rewards are tied to security circles, not a multi-level payout. It's a security graph, not a pyramid. Faced with skepticism, the Pi core team hasn't buried their heads. They've been methodical, maybe a bit slow, but deliberate. Their cautious approach is a feature: build utility before speculative value. Launching too early would let whales grab tokens and pump and dump the project. They've ticked beta, testnet, and enclosed mainnet. Open mainnet is next. They're measuring twice and cutting once, prioritizing security and scalability. Migrating millions and enforcing KYC is long, complex, and necessary for compliance. KYC helps prevent money laundering and meets regulatory standards. They've partnered with third-party KYC providers and published privacy policies. They assert user data is not for sale. On MLM accusations, the team highlights key differences. Joining is free, the referral system isn't multi-level, and you earn only from direct invites. It's slow and frustrating, but the team believes it's necessary. They're building for longevity, a sturdy foundation to last. They aim for a transparent, compliant ecosystem to gain mainstream trust. Caution over speed may cost patience, but could spare the project from catastrophic failures. The community, tens of millions strong, waits for one big thing: open mainnet. The moment the firewall comes down, Pi will connect to other blockchains and exchanges. This is the project's day of reckoning. Pi will get a public price. Pioneers will be able to trade coins for other crypto or fiat. If a fraction of users start trading, demand could surge. But with open markets comes intense volatility and risk. A sell-off from early pioneers could crash the price and shake confidence. The core team's biggest challenge: manage the transition to stay stable. They've set conditions: KYC progress, app readiness, and network maturity. If handled well, the economic power of millions could be unleashed. Apps and merchant adoption could create durable demand. Pi could be a bridge between old finance and new user-friendly Web3. But the risk of speculation is real. It could wash away community value. The team must manage a staged rollout to protect community value. If the focus stays on utility, Pi could survive the first storms and build long-term value. When you take a step back and look at the big picture, Pi Network is more than another cryptocurrency. It challenges how we think about value and community. The idea of money itself could shift from centralized to social utility. Crypto has been about complexity and exclusivity. Pi tells a different story. A new path where participation, trust, and accessibility matter most. By making participation free, easy, and rewarding, Pi taps human psychology. It built a global community at a scale we've rarely seen. It turned the abstract idea of crypto into a daily habit and an educational tool for millions. That habit-forming grassroots education might be Pi's strongest legacy. If it succeeds, the implications are huge. It would show that a cryptocurrency can be distributed fairly and widely. It could reshape digital identity and how online communities form value. The coin's backing becomes the collective belief and utility of people. Pi asks a profound question: can we build a more inclusive digital economy from the ground up? We don't know yet, but for the first time it feels like we might have a real shot at finding out. Follow the story, stay curious, and remember, the last chapter hasn't been written. Subscribe for updates, sources linked below.